in addition to what we expect will be continued healthy physical demand for gold.
So here's a question for you. For UBS clients, high net worth or ultra high net worth individuals, I mean, a lot of them own gold physically. I know that, right? There are also other ways to play gold indirectly as well, through proxies, through listed miners, and all the rest. What would be a preferred way of getting exposure to gold if you're right and the price is going to go up to 2,200?
So it really depends on the type of investor and their risk appetite. So there are investors, long-term investors tend to hold physical metal, for instance. More short-term players probably would like to dabble in the futures market or structured products, options, and things like that, or for kind of to have some leverage, also do some of the miners.
Yeah. So, we've been talking about the outlook for the Fed and interest rates, et cetera, and there's been so much pushback, and obviously at the end of this week's Fed meeting and the press conference, right, we're going to be listening out for Chair Powell to push back on expectations that, I mean, the narrative is basically, look, if you're looking for 6 cuts this year, don't hold your breath, right? And from the guests we've talked to just this morning alone, consensus seems to be, look, if we're lucky, they start around halftime, May or so, and we're going to get 75 basis points maximum, not 150. We had one guest saying, hey, lucky if we get 50 basis points. What is the House view on that, and how it affects your gold call?
So we are ahead of consensus. We are actually expecting the Fed to start cutting in March, and this, I guess, more dovish view on the Fed does feed into our more bullish view on gold.